Well, let's talk about the commercial real estate property values. They've been sinking across the nation as foreclosures continue to rise. But our next guest sees some opportunity through all the chaos. Joining us right now is Robert McGuire. He's the chairman and chief executive of McGuire Investments, also one of the biggest commercial property owners in L.A., and Philip Blumberg, who is the chairman and chief executive of Blumberg Partners. That's a real estate asset management company. Also, our guest host today, of course, Jeff Green. Gentlemen, thank you for joining us. I want to start things off with you, Philip. Where do you think we stand right now, just in terms of commercial real estate? We know it's a problem. We know things are getting bad. But is it better or worse than when you read in the media all these headlines?
I think it's going to be getting significantly worse.
You do.
Every job layoff, it pegs to our commercial real estate market. It's a contraction in the tenant base. But the real story here isn't the performance of the market. It is the debt. Think about this. We got about $300 billion in the next 3 years, 2010, which is when it really starts, to 2013. We got about $300 billion in CNBS, of which 70 to 100 billion is not refinanceable. Okay, but to put it in real perspective, on top of that, there's $1 trillion of bank loans written in the same time frame with the same dubious underwriting coming due in that period. $1 trillion in bank loans. So I think when you talk about the banking sector, we're talking about a major impact, another blow to the belly of the banking sector when commercial real estate really hits it.
Yeah, I think there are very significant opportunities. So I think what we're seeing is there's so much money starting to come into the market with $9 billion of new REIT equity offerings, and Simon Properties just did $500 million of new debt, I think yesterday at 7% for 5 years. So those are encouraging things.
Jeff, what are you doing right now? I know you've got a huge amount of properties, apartment buildings, and other things that you own. What are you doing right now as a way to either take care of those properties? Are you extending into other areas?
Well, I mean, I'm very pessimistic about the economy and about the look at today, 637,000 new jobless claims, 6.5 million people with jobless claims. I mean, we're in a difficult time. You talk about the REITs as an example. I mean, to me, they look like even though they raised $9 billion, to me, it's like a slow-speed train wreck. I mean, you've got these REITs that own commercial buildings are dealing with several things. First of all, they've got leases that come up. They have to renew them, sometimes if it's an office building or retail, for multiple years at highly reduced rents. On top of that, the financing that they have at 4%, 5% is being renewed, not being renewed at all. If they're lucky to be renewed, it's being renewed at 8 or 9%. Then on top of that, if you look at the REITs, look at the equity dilution that's happening. So to me, it's a triple whammy for them. What I'm personally doing is just trying to manage our portfolio of real estate as defensively as possible.
So not making new incursions.
No, I don't see any signs that the economy is doing better. You look at the statistics. We could have 5 years, 7 years of slow growth. So I'm on the sidelines for quite some time, and I haven't really seen any distressed offerings yet. There's still a huge disconnect between what sellers are asking for properties and what buyers are willing to pay. So there are no deals yet, but there will be deals. But I think what will happen is by the time the deals come along, everyone will be so beat up they won't want to buy them anymore.
I would agree with Jeffrey. If you're talking about bricks and mortar, you better stay on the sidelines for now. There may be one-off deals, but the central process of buying trophy assets or large assets is going to wait a little bit. Right now, we're looking at CMBS. We're looking at originating loans under the TALF program that Rob mentioned. We're looking at buying distressed debt. We have a lot of investors who are interested in us doing that. The second area, REITs. Commercial REITs are going to be suffering. They are not well structured to go through a distressed time. We're looking at buying REIT securities and possibly whole REITs. And then third, and a little bit later, we'll begin the bricks and mortar business again.